The BetaShares Australia 200 ETF, or A200, is a low-cost exchange-traded fund (ETF) that gives you exposure to the top 200 companies listed on the Australian Stock Exchange (ASX). It tracks the Solactive Australia 200 Index, which includes the largest companies in Australia based on market capitalization. What does A200 do? A200 invests in the top 200 Australian companies, spanning a wide range of sectors like financials, mining, healthcare, and consumer goods. By holding A200, you're effectively owning a slice of Australia's largest and most well-known companies, such as Commonwealth Bank, BHP, and CSL. The ETF is passively managed, meaning it aims to mirror the performance of the Solactive Australia 200 Index without trying to beat it. This approach keeps costs very low while providing broad exposure to the Australian economy. Why invest in A200? A200 is designed for investors who want a simple, cost-effective way to gain exposure to the Australian stock market. It's a great option for long-term investors looking for growth, diversification, and regular dividend income. Its standout feature is its ultra-low management expense ratio, MER, of 0.04%, making it one of the cheapest ETFs in Australia. Lower fees mean more of your returns stay in your pocket over time. Example of how A200 works. Suppose you invest $1,000 in A200. That money is spread across the 200 companies in the index. A significant portion will go to large-cap companies like Commonwealth Bank and BHP, which dominate the index. If the Solactive Australia 200 Index grows by 8% in a year, your investment in A200 would also grow by roughly 8%, minus the 0.04% fee. Additionally, if these companies pay dividends, you'll receive a share of that income as part of your investment in A200. Benefits of A200. Low fees. A200 has an MER of just 0.04%, making it one of the most affordable ETFs in Australia. Lower costs mean you keep more of your returns. Diversification. By investing in 200 companies across various industries, A200 reduces the risk associated with individual stocks. Dividend income. Many companies in the index pay regular dividends. A200 collects and distributes these dividends to you, providing an additional income stream. Simple and accessible. A200 trades on the ASX, making it easy to buy and sell like any stock. Risks of A200. Market risk. A200's performance is tied to the overall Australian stock market. If the market declines, the value of A200 will also drop. Sector concentration. The Australian stock market is heavily weighted toward financials and mining, so A200's performance may be influenced by the ups and downs of these sectors. Currency risk for global investors. If you're investing from outside Australia, fluctuations in the Australian dollar could impact your returns. Is A200 right for you? A200 is an excellent choice for investors looking for broad exposure to the Australian market at a low cost. It's ideal for those building a diversified portfolio, seeking regular dividend income, or wanting a simple and efficient way to invest in Australia's leading companies.